Welcome back, guys. In today's video, we're going to be talking all about Aurora stock. Now, I don't personally like making too many videos on this topic because here on YouTube, I have to use a lot of code words and it gets very annoying, but hopefully you guys know what I'm referring to when I say the can market. And in the can market, well, many stocks were once high flyers, but have recently been absolutely destroyed in the last couple years. And Aurora has been arguably the most prominent example of that, falling from a high of over $150 a share all the way down to just the $1 range today. That's pretty crazy. So the question is, can this once high-flying growth stock recover now to its former glory and potentially give investors a gigantic profit opportunity along the way? Or is there nothing really left to salvage here and it would be smarter to just kind of move on with safer investments in the stock market for the long term? Let's find out together right now. Okay, so pulling up the stock chart here, we can see that they used to trade for only a couple dollars a share before skyrocketing several times, eventually reaching an all-time high north of $150 per share, which was during the height of what many refer to as the can bubble of around 2018 and 2019. However, that bubble has famously burst since then, with Aurora in particular starting to crash in sometime 2019 and eventually falling all the way back down to just the $1 range today, which, by the way, that's a crash of 99%. So meaning anyone that bought at the highest levels, I mean, they've lost like almost 100% of their value at this point, which is pretty wild. So anyway, why did it rise by so much and then subsequently crash back down? Well, initially Aurora was riding high on the promise of can legalization around the world, which had already started in their home country of Canada back in 2018. Canada became the second country in the world to legalize it. So in the case of Aurora, investors looked at it and they said, hey, here's a huge growth opportunity for this Canadian company operating in a market that has legalized it now, and they're also right across the border from the United States, which will be an even larger market over time. Now, in the case of Canada, recreational sales were practically doubling for years in 2019, 2020, and 2021, before now finally plateauing a bit and slowing down in growth. In the case of the United States, it's still illegal on the federal level, but more and more states have begun to legalize it in some way on a state level, as you can see on this chart here, with only 4 states left that are still fully banning it. As a result, though, especially because of the growth in the Canadian market, Aurora started to see exploding sales that grew by over 1,000% in 2017, almost 200% in 2018, and then still close to 500% in 2019, right when Canada became legal. Since then, though, it's all been downhill for them. 2020 saw much smaller growth of around 13%. 2021 was an actual decline of 12%. This year is expected to continue that downward trend with another double-digit drop. And then finally, by next year, they're expected to rebound a little by 7%, but even then, their sales will still be lower than where they were like 4 years prior in 2019. And again, that's largely due to the plateauing of growth in Canada, which I showed you earlier, while at the same time, there's been rising competition from other players that are starting to saturate the market. In Aurora's case, while they were once considered the largest grower in North America, they've now fallen all the way down to the number 9 spot behind not only other Canadian players, but even newcomers from the United States, particularly from states like California, New Mexico, Colorado, and more. Aurora does, however, also sell various canned products themselves, but regardless of whether you see them like as a grower or you see them as a product developer or seller, whatever it is, the point is they do all of it, and Aurora has since fallen from grace from their prior glory, and they've been trying to really catch up ever since. And pointing more directly to the stock crash itself, a large part of that was due to valuation as well. Since Aurora has never really been profitable, we have to value it using a price to sales ratio, where we can see that at one point, especially around 2018 and 2019, the stock was trading for a PS ratio well above 100, which is insanely higher than the standard PS ratio of 1 that we generally consider, recognized to be a good value in the market. So obviously a major crash was needed to get back down to reasonable levels, which we'll talk more about in just a second. But just to quickly touch on that profitability issue, Aurora has also been notorious over the years for promising shareholders that they would eventually reach profitability, but they only ever end up having to sell stock and dilute shareholders just to stay afloat. For example, when looking at their annual cash flow, you can see that in 2017 they lost over 13 million Canadian dollars of operating cash flow, so their solution was to sell 120 million dollars of stock. In 2018, those losses grew to over 80 million, so they sold even more at over 200 million dollars of stock. In 2019, they lost almost 200 million and sold about 60 million. In 2020, they lost over 300 million, so they sold over $500 million worth of stock. And then last year, they lost another 200 million, so they sold a record-breaking more than $660 million worth of stock. And of course, the result of all of that has been skyrocketing outstanding shares that has made everyone's investment in Aurora worth less and less over time, with no real sign of that ever, really slowing down. Still, with all of those negatives in mind, there are actually a few reasons to maybe be optimistic and to think that Aurora can actually still make a comeback and turn things around if they're able to execute on a few different things. So let's talk about what those potential positives could be and whether I think that the stock is worth taking a gamble on at today's prices. Well, for one thing, the stock is way cheaper now with a PS ratio of only less than 2. Yeah, if a company is not growing, then anything above 1 is still considered, a little overvalued. But if Aurora can get some of their magic back and start putting up some really high growth rates like they used to, then that valuation would be considered dirt cheap right now. Obviously, that won't be a small feat, but at least Aurora is doing everything they can to give themselves the best shot of it. For example, the Canadian market is not growing much right now, but internationally is a completely different story. When looking at worldwide projections, according to Grand View Research, the global can market is expected to grow from $17 billion last year to a whopping nearly $135 billion by 2030. That's like 800 times the size of Aurora's current sales, by the way. And it's also a growth rate of over 25%. And the great thing about Aurora is that they have one of the largest global presences in the world at already 25 countries across 5 different continents. And just to give you an example of how this can help them, well, in Canada, Aurora already has the most market share with close to double the amount of their next closest competitor, but that country only has a population of less than 40 million people. Germany, on the other hand, has more than double that population, and Aurora already owns 2 of the top 3 best-selling dry flower products there, which positions them very well for Germany's impending recreational legalization that is expected to take place within the next year. Moreover, you'll notice that the largest portion of can sales are by far in the medical space, which Aurora happens to not only be the #1 market share leader of in Canada, but even internationally, their presence continues to grow, with medical sales growing by over 50% last quarter. And out of all of the Canadian companies that operate internationally, Aurora is also the largest among them, which, by the way, while we're on this page, I should also mention that they have the best adjusted gross margins as well, with 54% versus Hexo in second place at a much lower 36%. So even profitability could improve over time if they can ramp up their sales and benefit from a larger scale run. And while it's true that by far the largest market is still going to be the United States, which has seen an explosion of new competition flooding the market with already at least 6 different domestic growers having larger capacity than Aurora, well, Aurora is at least doing everything that they can to enter that market in a meaningful way, which I think is clearly evidenced by the $40 million acquisition of Reliva, which, by the way, before you ask, yes, they did pay for that with their own stock like usual, but the acquisition on the bright side is a big deal because Reliva sells hemp-derived CBD products in America, which is actually legal at the federal level. So that gives Aurora the chance to finally enter that specific US market that is estimated to be worth $25 billion by 2025. And the great thing is that Reliva is already ranked #1 as a CBD brand through brick and mortar retail according to Nielsen. So you combine that with the international expansion, especially in Europe, and yeah, there's at least a chance here that Aurora can turn things around in the near future. Will that actually happen though? It's difficult to say. I mean, we really need to see Aurora start to generate some positive cash flow and stop the burning through their stock to really be able to look at Aurora once again as something that is actually investable rather than just a speculative gamble. And in the meantime, there are actually some other options out there in the market if you want to take on a little bit less risk but still want exposure to the canned market. For example, Green Thumb Industries has reported profitable quarters for the last 7 quarters in a row, and they actually operate in the United States market. That's their home base, so they're in a pretty good position there. And me personally, I'm actually invested in Scott's Miracle-Gro, which is an indirect play on the can market, and they even pay a pretty attractive dividend as well. And on top of all of that, we are in a recession right now economy-wise, and the stock market has essentially been crashing. So there are a ton of other stocks that are not necessarily involved in this market, but just some really great, profitable, gigantic, really solid companies with good growth that are trading at some huge discounts. I actually make like a video almost every week talking about different stocks that I think are on sale at today's prices. But still, it is very difficult to ignore Aurora stock at these prices as a very high risk but also high reward speculative gamble. And in my opinion, I still think it's safer than most other gambles that people waste their money on, like going to the casino or buying lottery tickets. We just had the Mega Millions that I think was sitting like at a record high, and I'm in group chats with friends and family, and so many of them were buying lottery tickets. A few of them even bought like 10 lottery tickets at a time trying to win this lottery. Not a single one of them even got one number correct. So why waste your money on things like lottery tickets and those kind of gambles when you could take a chance on a stock like this, a company like this that does have very, very high potential to turn things around if they're able to execute on a few things. So look, as a risky speculative gamble in the can market, Aurora is like my top choice. I mean, I really like them for that. But as an actual investment, I think there's much better options out there that are trading at huge discounts right now. So for me personally, I'm not in the market for a spec stock at the moment in the can market. I have Scott's Miracle-Gro to give me some indirect exposure there. I don't feel like I really need Aurora. But if I was looking for that, I wouldn't mind taking a little gamble on Aurora, but it would be a very small speculative gamble, like 0.1 or 2% of my portfolio, 0.11 or 2, and maybe take just a little chance on it. But again, I don't see it as an actual investment. I see it as more as a speculative gamble. So it just depends on what you're actually looking for and how much risk versus reward you want to take on. But anyway, those are my thoughts on Aurora. What do you guys think? I'd love to hear your thoughts. Drop your comments down below. Do you own it? Are you thinking about buying Aurora? I'd love to hear your thoughts. Do you think all hope is lost with them? And I'll try to respond to as many comments as I can. But thank you so much for watching the video, for all the support. I will catch you guys in the next one. Take care. Bye-bye.